Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Influential Entrepreneurs is sponsored by Marketing Huddle, where we build an authority positioning portfolio that sells for you so that you don't have to. This unique approach gives credibility and trust to easily attract high net worth prospects and loyal clients using podcast and TV interviews and guaranteed press coverage. For more information, go to MikeSaunders360.com. Today we have with us Dave Wolcott, who's the founder and CEO of Pantheon Investments. Dave, welcome to the program.
Hey, Mike, grateful to be here to connect with you and your audience.
Yes, I'm looking forward to chatting with you because I know you've got a wonderful story and background and approach to serving your clients. But before we dive into that, give us a little bit of your story and how did you get into the financial services industry?
Yeah, sure, Mike. So I was raised in a middle-class family, and I was told that the recipe for success was go to school, get good grades, you'd get a job, and life would just work out, right? So I kind of followed down that traditional path, and then had the opportunity to actually join the Marine Corps doing the ROTC program. Joined the Marines, got to serve my country, and learn some things they just don't teach you anywhere else, things such as leadership, teamwork, and integrity. Shortly thereafter, I transitioned into the tech industry, and right about the same time, my wife and I started raising a family. We had an 18-month-old toddler, and then on October 24th, 2000, we literally welcomed triplets into the world. Wow. Which quadrupled the size of our family. And I can tell you, Mike, the biggest thing going through my head was financial security for my family and how am I going to really provide? So I went to see my financial planner and he told me, hey, don't worry, just max out your 401k. They've got 529 plans for kids. And it was really right then that I knew that the top 1% were not building wealth as retail investors in the stock market. So this launched me on this obsessive journey to figure out how the top 1%, the top 0.01% were really building wealth. I actually started investing in all kinds of private assets, things such as oil and gas, retail or real estate, from retail, raw land, single family, multifamily, self-storage, you name it. Fast forward 20 years, I did quite well doing that and then really founded Pantheon and wrote my book, The Holistic Wealth Strategy, to really help others figure out this blueprint to how to become, to truly create legacy wealth.
So many times when I hear stories and backstories and origin stories like what you just said, it's always about, I noticed something that wasn't there. I wish it was there. And now I want to help other people either prevent the pain or accomplish the gain that I did. So I love that lead in, and that's just so spectacular. And your approach to holistic wealth, that's unique because I find and feel that there are some people that go, oh, well, I discovered that this one financial product right here is so great, so I'm going to sell the daylights out of that one thing. But you take a 360-degree approach. How do you define holistic wealth strategy?
Yeah, so it's really interesting, Mike. A lot of people think about wealth in terms of financial capital, but when you start to talk to centimillionaires and billionaires and people, when you add just another zero to their net worth, that doesn't really make a meaningful impact to them. It's all these other forms of capital, things such as physical capital, intellectual capital, spiritual capital, emotional capital. These are the things we actually really want to bring on to our kids. And just think about physical capital for a moment. Steve Jobs had all the health, all the money in the world, yet he couldn't buy himself another day because his health had diminished. Right. So this is what it's really important to put your focus around these other forms of capital, because we're really using these financial capital to really ultimately get to these other things to live your best life.
Yeah, you almost become a life coach of sorts when you're meeting with the client saying, tell me what you wish your life would look like, in the respect of retirement. Well, so many times people say, oh, I want to be able to, fill in the blank. Well, that might take money. And I find that so many times people do not even know what they want. Number one, they don't even know what it is. And then number two, what they say that they would like to achieve in the future, in retirement, is not even close to what you would open up their eyes for. So as an example, like, oh, I think I'll need X number of dollars a month to retire. And you start asking questions and go, oh, well, have you considered and wanted to and thought about? And they're like, oh my goodness, I need kind of double the number that I thought. Is that some of the things you found out when working with clients?
You're spot on, Mike. So in my book, The Holistic Wealth Strategy, it's all underpinned by really creating a vision statement. Because if you don't have a target, you're going to miss every time. So getting crystal clear clarity on what it is you want out of life, and then trying to create goals and habits and a plan to be able to support that.
Yeah, huge. So you take a 5-phase approach. Talk a little bit about the phases, and maybe we can give a little 30,000-foot overview to each one.
Yeah, sure. So this is really a framework to really think about wealth in a completely different context, and it's flexible enough wherever you are on your journey. But it all starts with you, and in the first phase, and understanding that you are your greatest asset, right? And thinking about having an actual growth mindset. So when I started to invest in alternatives and private assets, people told me that I was crazy. My financial advisor said that's risky, right, to invest in these different assets. Well, I started asking questions like, does it really make sense to actually defer your taxes? I'd rather pay taxes on the seed rather than the harvest, right? And move into more tax efficient vehicles, right? Where I can, not only compound my money and get better returns, I can reduce my risk and drive some tax efficiency and passive income at the same time. But it all starts with having that right mindset and that growth mindset versus just following the herd, because everyone is saying, hey, well, that's what I'm told at my company. That's what my peers are doing. That's what my family is doing. So you really have to have that great, mindset, and then start to create goals and habits to really, support that as well.
It reminds me when you mentioned that about, when you take a flight and the airline says, where the story's going, like, oh, before you help someone else, make sure you put your oxygen mask on, because if you cannot help yourself, then you can't help the person next to you. So it feels selfish, insensitive to take care of yourself, but that becomes a starting point. Now, you don't, obsess there and stay there and take care of yourself at the expense of others. So what's one of the other phases that you focus on?
Yeah, so then in phase 2, it's all about trying to increase your IQ, right, in these other areas. So increasing your financial IQ. Just as an example, right, a lot of people don't realize that if you invest into private assets, into oil and gas, for instance, you can offset 100% of your income or your investment against active income. People don't realize that, right? And get a healthy return on top of that, right? And diversify your portfolio. But it takes increasing your financial IQ outside of, just some stocks, bonds, mutual funds type of approach, and starting to look at, other methods, right? We also want to be continuing to grow our mindset, so that we can increase the opportunities that we see. We can really manage our mind, right? Because the complexity only continues to grow as you scale into 7, 8 figures, and 9 figures, right? It only grows. So you want to continue to master your mind. We also think about, again, health, and constantly investing in our health and ourselves, and all of these other forms of capital that we talked about earlier.
I think a lot of times people hear something, and I'm sure that some social psychologist would have a study on this, but there's some people that hear of what you just said about oil and gas and go, oh, that sounds too good to be true. I'm not going to do anything. Or some people would jump on something, try to do it on their own, do it wrong, and they should have gone and worked with someone who's an expert that can go, yeah, there's some validity to this, but here's how to do it the right way.
Yeah, correct. And I know you're big on education, Mike, and right, this is all about education, but the people, right, who have the education and spend the time on that, they become empowered, and that's how the opportunities actually grow.
Yep. Yeah, and it's funny, and you've probably heard this many times. Knowledge is power. No, knowledge these days is not even as effective as it used to be because knowledge is at our fingertips with, online tech, ChatGPT, Google, whatever the case is. But the true power comes when you implement it. So having that hunger to, like you say, having that take care of yourself, having that educational financial IQ that you're seeking out, and then seek out people who can guide you in that process because we don't know everything about everything. But yeah, having that knowledge, huge, but then put it into action. Don't just go, oh, that sounds good, and then go about your way.
Yeah.
So what are some of the other phases that are in your book?
Then we move into phase 3, which is all about creating a dream team and infrastructure around your wealth, right? Because we all want to invest in different asset classes and investment vehicles, right, to grow our wealth. But it's also important to really preserve our wealth and then create an amazing team. So we actually run a virtual family office where, we set up a team of advisors that all speak the same language. They all understand advanced tax planning. They understand nuances of working with ultra high net worth families, right? And that involves areas such as asset protection, estate planning, advanced planning. Also, infinite banking is a great strategy. I know you've talked about that on your show as well, right? So how can we preserve our wealth and really get a multiplier out of our wealth as well by being able to leverage that around that. So you want to really create this team and a really strong infrastructure as you continue to scale.
Yeah, and I want to kind of come back to a couple of these little things here, but I think Dream Team is so huge because if Dave Wolcott said, "Oh, hey, Mr. and Ms. Client, I know everything about everything, tax, legacy planning, estate planning, investments, everything, you've come to the right place." That should raise a red flag to someone because Dave cannot know everything about everything. So having those professionals that are on the same page and kind of pulling in the same direction, huge, huge, huge.
Yeah.
So number 4, what's the fourth
so
step?
In the fourth phase, we often talk to a lot of clients around saying, hey, great, we understand, the first couple of phases, it really makes sense for us, but we don't have any capital to deploy. What do we want to do? Well, I'm going to be contrarian here and point out some examples that, not everyone's going to talk to you about, and it's all around asset repositioning. So really looking at where your capital exists today and how can I actually optimize that? And most Americans have their capital tied up in 2 places. It's in government-sponsored qualified plans like 401ks and IRAs, and it's also in trapped equity in primary residences or secondary homes. And I can tell you that the rate of return on equity in a primary residence is 0, right?
Yep.
Unless you're actually selling that. So can we, even though it's kind of, this American dream to pay off your house, well, you might want to rethink that, right? Based on your risk tolerance to say, well, if the bank's going to give me money, even today, at today's rates, 6-7%, and I can now invest in, for instance, we have a private credit fund that's doing over 20% return. And I can arbitrage that capital into a higher rate of return. I can actually service the debt with that. I can actually increase the amount of mortgage interest deduction that I have, and now completely optimize that capital I have. That's a huge win. Right. So that's, just one example right there, or on the 401k side, a lot of people don't realize you can actually, change the custodian to a self-directed IRA and start to diversify from the market and invest in real estate, and other private assets that, people didn't realize. So you can do a couple of things, which is increase the yield from those as well as, reduce your risk and start to diversify from there.
That's huge. And asset repositioning gives me the connotation that you don't need to, you're not focusing on new money. You already have the money in those specific places, but is it in the right place? What if we pulled out this from this bucket and put it in that bucket? So that's excellent. And I know that then if you have that strategy in place, then when new money comes in, then you're just following that same structure. So number 5, What is the 5th step? this
Yeah,
phase.
this is the fun one, Mike. This is all about building massive passive income. So rather than waiting until you're 65, right, which is traditional accumulation theory, and then I'm going to start to withdraw 4% of my portfolio a year and try to live that and hope you don't outlive your money. How about if you today were able to achieve enough passive income that you actually didn't have to work in your W-2 job anymore, or your spouse could, be home, or you have that income that can completely change the trajectory of your life because you have enough income coming in to meet all of your expenses and then start to grow your lifestyle. So we do this by investing in assets that are really tangible assets that are non-correlated to the stock market, things such as multifamily real estate, self-storage units, oil and gas as an example, other asset classes that provide you with a return profile that I call is really a trifecta. So rather than just being exposed to the markets where you're only hoping for that stock to appreciate and value, in this case, we get really that trifecta, which is we're driving passive income, we have tax efficiency in the asset, and you also have forced depreciation where the asset is growing over time as well. And that way you can get an exponential return, drive that passive income, and reduce your risk at the same time.
Yeah, I think that I love when things kind of stick out to you. And when you said massive passive, I was like, I'm just loving the sound of that, because I think people love the sound of something big, massive. So that's great. But passive income is huge, because at some age, you don't want to have that mental drain of, what do I do with this? Let me move this over to here. Let me go work, or let me go and do this job, or let me hope that my returns are good enough to draw out the amount of money I leave. But that passive income is powerful. And I think that it's so neat when I see these 5 phases. If you just did one of those things and stopped, boy, it's like the sum of the parts is greater than the individual pieces. So it's like you've got to do them all, and you get that exponential return because you're focusing on all of these things together.
Yeah, absolutely. And the results have been huge, Mike, right? Watching our clients actually implement this, over, the past 5-6 years, it's been just amazing. People are paying, marginal amounts of taxes, which frees up additional capital to then grow. They've diversified from the markets. They're getting very strong double-digit yields on their portfolios. And most of all, people have clarity and confidence over, achieving their wealth vision and living that best life.
Yeah. And when you start talking to people about some of these things, I can only imagine that there's some people that go, that's just not what I've normally heard. Normally you hear the traditional, work the job, put your money in 401k, retire, and there you go. But when you're bringing some of these things up, it's got to be new to some people. What is your advice when someone says, yeah, but it just sounds different, or I'm not used to that? How do you help them understand that these are new, but actually successfully clues, and they're proven? Like the infinite banking concept. It's like, if you dig into that, it's like that's been around for over 100 years. So what is your response to people that kind of have a little bit of a confusion on wanting to stick with tradition?
Yeah, Mike, I think for people who want, this really isn't for everyone. Right? If you just want to kind of work with an advisor and set it and forget it, and maybe you make a couple million and retire, that's fine. We're really trying to focus on people who want to build a big life, really create massive freedom and impact in their lives. And by doing this, you have to, like I said, have a growth mindset. You have to start asking why. Right. And really thinking outside of the box. And once you do, you start to understand that we have this multi-trillion-dollar financial services industry, and, 99% of the community is aligned to this model, which is assets under management. Right. So they're making recommendations to you because it makes sense for them. That's how they're making money, on, stocks, bonds, and mutual funds, right? Versus they're not going to talk to you about investing in an oil and gas investment, right?
Yeah.
Because they can't sell it, right? So it's a bad idea to them. It's risky, and they don't know. And we're dealing typically with only accredited investors in our community who can actually get access to these types of opportunities. And when you start looking at the way family offices and high net worth and ultra high net worth are organized, you can see portfolios like Tiger 21, for instance, who has 1,300 members. Average net worth is 100 million per family. They have a typical allocation of only about 22 to 25% in public equities.
Wow. Yeah. I love that you say this is not for everyone, because again, certain red flags should be raised when it's like, everyone should do this, let's go. So I think that when you were to say to someone, hey, let's just take a look. Let's see where you are. Let's see where you want to be. Let's see if some of these would make sense to you. And probably the best place to start would be read the book. So let's wrap up with, how can people learn more and pick up a copy of your book?
Yeah, so Mike, what I wanted to do for your listeners is actually provide a free gift and get a free copy of the book. If you just go to holisticwealthstrategy.com, and you can download a free copy of the book.
Excellent. Well, Dave, thank you so much for coming on today. It's been a real pleasure talking with you.
Thanks, Mike. Really appreciate it.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.